What is going on, investors? Hopefully you guys are doing well out there. It's actually early morning over here at the Investor Channel because Palantir Technologies reported their Q2 earnings and the stock market is loving it. This stock is up 8% after being down, I think, about 2.5% yesterday. Ticker symbol PLTR on this one. We'll talk about the Q2 numbers. We'll talk about the Q3 guidance on this show as well. We'll get into the numbers. We'll understand Palantir Technologies' revenue model. We'll get into the revenue. We'll look at it from a 3-month basis and a 6-month basis as well. We'll understand all these costs that are associated over at Palantir as well. We'll see what's going on there. The other thing we'll do is we'll come over and look at this from a technical perspective. And I say a technical perspective, and I get comments saying I don't pay attention to technical analysis. Well, that's like going to economics 101 class and not paying attention to supply and demand. Because that's all this chart is supply and demand. It shows you where there's demand for Palantir stock, and they're showing you where supply comes in. And when you understand that, I'm telling you, the whole stock market opens up to you. Once you understand the numbers and understands how people are interpreting and factoring these numbers into the valuation, and then you come over here and look at the supply and demand, I'm telling you, you will become the best investor you ever have become. And so I'm going to here to help you walk you through this. Look, the stock's up 9% today. This thing's popping today. You might say, well, I've missed my move on Palantir. I can't get this stock at a good price. We'll talk about that. Maybe there is still a good chance to get this stock. I mean, this thing is moving today up nearly 10%. And why is that? Is that because Q2 revenues came in, and on the top line, the top of the press release, full year outlook was raised. Q2 guidance was beat. That is because our revenue came in 49% year over year to $375 million. Now, what they also gave us was Q3 guidance. So that's the upcoming quarter. That revenue is expected to come in at $385 million. So we just did a quarter where we did $375 million. The upcoming quarter, we should do $385. The consensus for Q3 was at $380. So we bumped that up by about $5 million. And the other thing to keep in mind is all these companies, including Palantir, tend to sandbag or underrepresent this guidance. So you better believe Palantir is actually internally, they're actually expecting to come in at 387, 388, maybe even as high as 390 on that one. That would be a fantastic beat. So they're actually expecting to beat this 385 number. So you go from 375 probably up to a 388, 389, maybe even as high as 390. That's solid quarter over quarter growth as well. Now, the other thing that I want to point you out about Palantir is this company, they book contracts with like governments and they book these big contracts that are delivered over a longer period of time than maybe a traditional sale like you might have with Nike or something like that, where they sell a pair of shoes and they collect the money right away. Well, Palantir is booking or billing the clients over a long period of time as that contract kind of pays out. And one thing that I want to show you, and I don't always go over this slide, but I think this is a very, very pertinent slide to Palantir. Total contracts value book. So if every client that Palantir has paid their contract up front and had to pay it in cash today, the value of those contracts would actually be $925 million. Take a look at where we were last year. Just a year ago, the total value of if every client paid their contract all at once, it would have been at $337 million. We just did a quarter where we did $375 million. So this also has investors very, very excited. How should I say this? There's a lot of hidden revenue over at Palantir. So while we recognize $375 million in this quarter, and we'll recognize a little over probably $385 million worth of revenue next quarter, there's over $925 million worth of revenue that will be recognized or should be recognized if these contracts play out and Palantir can deliver on them to their client satisfaction. Well, there's a lot of revenue here left. And if you can keep growing the total contract booked and you get this over $1 billion, $2 billion, $3 billion, well, then this valuation starts to make sense. Because one thing that I want us to keep in mind during this program, and this valuation is going up as we speak here, we're sitting at a $43 billion valuation. We'll talk about that more here as we work through the statement of operations, or in other words, the profit and loss statement. So we've got our 3 months ended here. Left-hand column is our most recent quarter. Here's that $375 million worth of revenue we talked about. Again, they're going to come in at 380, 385 next quarter. We'll talk about that more here in a second. The last quarter was here. Here's our 50% revenue growth. We went from 251 up to this 375. The two right-hand columns are for 6 months. So we're 6 months into the year. We get a 6-month view there as well. Now, Palantir checks a lot of boxes. There's a reason why this stock is hyped a lot. I don't exactly know why. There's a lot of YouTubers out there that are hyping this stock. A lot of people are very, very bullish this stock. And I'll tell you right now, it does check a lot of boxes that Wall Street absolutely loves. The first box that Wall Street loves is revenue growth. Okay, so we have that 49% revenue growth. You got to check that. Okay, so you have strong revenue growth. The other box that it checks that I think Wall Street loves even more so than revenue growth is gross profit or gross margin. Take a look at this. We spent $91 million or $90.9 million to make this 375. That is a minuscule amount of cost of revenue. So that gives us gross profit of $284 million. Okay, this is off of $375 million. 284 of it is gross. That is fantastic. So Palantir checks both those boxes. High revenue growth, high gross profit. Now, we've got other operating expenses over at Palantir. Got selling and marketing, got research and development, and we have general administrative as well. And we see that those are growing rapidly as well. Okay, those are growing at the 50% clip as well, essentially. We've got sales and marketing went from 102 up to 162. That's pretty fantastic growth there as well on the expense side. Research and development went from 86 to 110. General administrative went from 93 to 157. That gives us total operating expenses. This is all our operating expenses. This is not just cost of revenue. This is total operating expenses. It's actually separate of that. So we went from $282 million worth of cost all the way up to 430. And one thing that I want to remind you is we had $375 million worth of sales. We have $430 million worth of operating expenses, and we got another $90 million worth of cost of revenue. So you guessed it, we take this gross profit of 284, we minus our operating expenses here at 430. That gets us a loss from operations at $146 million. So you guessed it. Yes, we grew our top line by 49%, but our loss from operations actually grew by about the same figure. Went from 99 million up to 146. That's about 50% growth on that loss from operations side. So the business, here's the thing though. What I want you to think about with Palantir, and I'm not making excuses for this company. I'm just giving you the bull case argument. I'll give you the bear case argument here in a second. But the bulls are going to say, look, they have $925 million worth of business that is going to come in. So when you look at this sales and marketing figure, okay, the fact that it went from 102 up to 162, Palantir has to recognize marketing expense in the quarter it occurs. So let's, for example, say that Palantir, they land a $10 million contract with somebody and they had to, pay $1 million for sales and marketing of that company. Well, they might not recognize that $10 million for, a year, 2 years, 3 years, however long that contract takes to play out. But they actually have to recognize that marketing expense right away. And so that is one way to kind of think about Palantir is, yes, the sales and marketing looks a little hefty, and it certainly is. And a lot of these other expenses do as well. But they are building up a book of business that is likely to pay out over the coming quarters and potentially years ahead. So those are things to think about. The other thing that Palantir is going to want you to think about is a lot of these costs are associated with stock-based compensation. This is what I want to show you. Here's for 6 months ended. This is stock-based compensation expenses. Here's total stock-based compensation expense. Take a look at this. For the most recent quarter, they paid out $232 million worth of stock-based compensation. You might say, well, what's the big deal about that? This company had a gross profit of $284 million. So off of gross profit of $284 million, we had stock-based compensation of $232 million. Let's take a look for the 6 months. We had $426 million worth of stock-based compensation, and just the revenue was $716 million. If that seems really high, Yeah, it is. And that is the bear case. Okay. First of all, we've got a $43 billion valuation on this one. We've got a company that lost $146 million in the quarter. For the last 6 months, we've lost $260 million. So our losses have actually accelerated quarter over quarter. Looks like we lost south of 120 million last quarter. Now we've accelerated that to 146. This company loses lots of money. From the top line perspective, we can annualize this number out and give them credit for some growth, give them credit for $2 billion worth of revenue for the full year. We're still sitting at over 20 times sales on this one. And this is giving Palantir a lot of credit for sales that have not been recognized over the next few quarters. Yeah, that's why the short interest on this one is at 4%. The other thing to keep in mind with stock-based compensation is, what do these people do? Okay, they are being compensated with stock in lieu of cash. So what do those people do? They tend to sell the stock, and it can keep a lid on the stock. So I want you to keep in mind, here's evidence of it as well. Take a look. For last year, we had 618,000 outstanding shares. That went up by 300%. To over 1.8 million. So, I mean, we are just, we tripled the number of shares outstanding. And a lot of it is going to employees and things like, and executives and those types of things. So it's not flowing off the balance sheet. So some people might come here to the balance sheet at Palantir, which is this segment right here. And we see on the balance sheet, they have $2.3 billion worth of cash, another $242 in receivables, total current assets sitting at $2.6 billion. You might say, well, look, the company over the last 6 months lost $260 million and some change. This is a company that is probably going to have to raise some money. And I would probably agree with that. I think Palantir will raise more money in the future. And how are they going to do that? They're going to issue more shares, but they have not taken on any debt. In fact, they paid that off. They had $197 million worth of debt. They paid that off by issuing shares of the company. Total liabilities of this company sitting at only $1 billion. So there's really not a whole lot to see here from a balance sheet perspective. But I wanted you to understand that yes, we are, quote, losing money up here, but some of this money, in fact, the majority of this money is stock-based compensation. And you have to ask yourself, whether you pay Palantir employees with cash or stock, you got to pay them one way or another. Now, one way that the stock-based compensation is going to affect things is on the cash flow statement, because I don't agree with this at all, but accounting rules allows Palantir to add back in stock-based compensation. So we pull down this net loss. This is for 6 months. We've lost $262 million, but we get to add back in this $426 million worth of stock-based compensation. That gets us net cash provided by operating activities actually was positive by $139 million. So this company, it might look like, hey, these losses are bad. I don't want to say only, but this company only has $2.3 billion worth of cash and some restricted cash and some receivables. Well, they keep this up for a couple quarters and that cash is going to diminish. Well, no, it's not necessarily going to do that, because they are compensating the vast majority of those expenses actually in stock-based compensation. And we see here as well, principal paid on the borrowing, so they've paid off some debt as well, but they proceeds from the exercise of common stock options. You see here, here's your dilution there. So it's a push and a pull with Palantir. They could be burning through cash by paying their employees with cash. That would impact the balance sheet. Personally, where interest rates are, this company could borrow money probably at 2%, 3%, 4%. I'd probably rather them do that than dilute you, the shareholder, by over 300%, like a 3x over the last year. But that's the game that Wall Street plays, and that is what you have to deal with over at Palantir. Now, from a technical perspective, or probably better said, a supply and demand perspective, I don't want you to look at these charts and think it's voodoo or think it's some kind of mythical science that people come up with and draw lines on here to make pretend like they know what they're talking about. All this is, think about this as like the price of Nike shoes, the price of houses, okay? All that is supply and demand, right? Everything that has a price is judged by supply and demand. And when we look at Palantir, and this goes back a long ways, this goes back to November of 2020. So this, for a long time, this stock has traded really between $20, $21 up to 27. I mean, it's literally been in like a $6 to $7 range. And how do I know that? I drew two lines on here. I drew one line down here at, you could probably leave that right around $21 per share. And I drew another line up here at $27 per share. And the vast majority of these candlesticks you see fall in line with this. So where is their demand for Palantir shares? It's actually right here between $21 and $27 per share. Where do sellers step in on Palantir? Where does supply increase of sellers? So where does the supply side come on the selling side? Anywhere over 27, because yes, you see anytime this stock has gotten up over $27 per share, yeah, it's hung out there for a little bit, but it comes crashing back down into our zone very, very quickly, okay? There's not a lot of candles. We're on a daily chart. Each one of these candles is a day. The vast majority of these candles are in the box that we have outlined here. So sellers show up over 27. That's something you want to think in mind when you're thinking about Palantir. Something you want to think in mind when you buy a pair of Nikes or a house or anything out there. When the price gets too high, guess what? People sell in the stock market. And when we're talking about Palantir, the price gets under $21, buyers step in. Because take a look at this. Since November, this stock has hung out just for like maybe a week or two under the $21 per share. So you bet you get under $21 or anywhere close to $21 per share. Guess what happens? The supply of buyers of Palantir increases and the supply of sellers decreases. That is why this price tends to go up. Now you might ask yourself, well, now here's where Palantir stock is sitting at. I'll actually draw a line in here so it's a little easier for you to see. We're sitting right here around $25 per share. Is it the top or the closer to like the higher middle of this range? Yeah. And so what we're looking for with Palantir is where we're looking probably for this thing to walk back up to 27 bucks. I think this thing's probably coming back to 27, at least 26. Okay. We've got the momentum on this one. It's formed a little bit of a bottom. You've seen when this stock starts to work its way back up, it tags down here at 21. Almost every time it's tagged down here at 21 or below, it has walked all the way back up or very close to $26, $27. Now, the key, if you're bullish Palantir and you want this thing to just go up so your stock portfolio looks good every single day, is you're looking for a break above 27. And you're looking for a convincing break above 27. Because look, we broke above it here and it hung out there for a second and then eventually crashed all the way back down. Same thing here. We broke above it. Yeah, we got all the way up here to $40. But what I want you to understand is if in the coming days and weeks ahead, Palantir breaks above 27, I would expect sellers to come in at some point in here. Now, if it rallies and it rallies hard, that's great. When you break above this 27, from a technical perspective, that is a very, very bullish sign. But what is also going to be stretched over at Palantir? This valuation is going to go up and up. We'll get to $45, $50 billion valuation on this. And then short sellers and sellers will start evaluating, well, this is a company that's diluting us by, 3x over the last year. This is a company that's losing money. And in fact, those losses are accelerating. This is a company that, yes, it has nice revenue growth, but we're still sitting at south of $2 billion for the full year, right? Because we can annualize this 6-month number out and we're sitting at $1.5 billion. We'll give them a little bit of credit for some growth over the next 2 quarters. It doesn't get us anywhere close to $2 billion. That means we're sitting at, way over 20 times sales on a company like this. And company's going to have to grow into that valuation. Now, the other option is Palantir could come up here to 27 and it does what it's done routinely over the last several months, is get rejected here at $27 per share. It gets rejected at 27 and it comes back here to 21. Well, guess what? It's probably a buying opportunity for Palantir. And so this trend, this supply and demand chart is intact until it's not, okay? Until we break trend and it appears that we start a new one, okay? And so I want you to keep that in mind. If we break above it, well, that could be an indication that trend is changing. We break below it, that also could mean trend is changing and it could mean the stock is going lower. So those are things you want to keep in mind. If you want to add to your Palantir position, if you want to start a new one, or if you're even thinking about selling your shares, okay? This gives you a really, really clear view into that, okay? We get above 27, you probably should think about selling. Okay, you get below $22 per share on this one, it certainly creates a buying opportunity as well. Again, that is with this supply and demand in check. Just like houses, just like Nike shoes, just like anything, supply and demand changes over time. And that is why we walk you through the fundamentals of the stock as well. Because if supply and demand changes over here on the stock chart, guess what's else going to change? The fundamentals. And so that's why I want you to understand these. If these numbers get better, these costs start to get more in check. The book of business just continues to grow, and we have all this book of business that we have not recognized. Well, that is very bullish for Palantir as well. That would change the supply and demand picture. That would drive share price up as well. So understand both those things. Understand there's two sides of the market. There's your bulls and their bears. You're the buyers and the sellers of a stock. And tell you what, the buyers have come out and the sellers have dried up in force today on Palantir. The stock's up 10% to about $24.75. We'll see where this one is headed in the coming days. That was Palantir. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.